Welcome to the Digital Intellect, bringing you the latest news from around the world. Tonight, a trade war has erupted on America's northern border. Ontario, Canada's economic powerhouse, is severing a critical supply chain to the United States. Premier Doug Ford has announced Ontario will redirect all future advanced electric vehicle battery output to Europe, a $20 billion supply chain shift. This is a direct response to escalating American trade pressures. For years, American automakers relied on Canadian resources for their EV transition. That trust is now shattered. U.S. companies are scrambling for alternatives, questioning the reliability of their closest trading partner. The decision builds a new economic wall along the world's longest undefended border. While Washington reels, Brussels celebrates. Europe has secured a critical component for its green energy future. The headlines are stark. Ontario breaks with US-Europe secures battery bonanza, North American trade in chaos. Former President Trump calls it a betrayal, but many Canadians see it as self-preservation after years of unpredictable US trade policy. The fallout is immediate, supply chains in disarray, political tensions soaring, and the North American economic landscape forever changed. This isn't just about batteries, it's about trust, and the future of North American trade. The story of how we got here is one of political gambles and economic brinkmanship. The integrated North American economy, once a model of cooperation, now faces its greatest test. Ontario's move is bold, defiant, and risky. The consequences could be devastating for millions of workers and businesses on both sides of the border. The U.S. appears caught off guard by this strategic maneuver from its northern neighbor. The partnership between the U.S. and Canada is fracturing before our eyes. The next chapter will determine the fate of North American prosperity. This crisis didn't erupt overnight. The spark was the Trump administration's tariffs on Canadian steel and aluminum. Citing national security, the U.S. imposed steep tariffs, which Canadians saw as a hostile act. Retaliatory tariffs followed, but the damage to trust was done. Automakers dependent on seamless cross-border supply chains faced rising costs and uncertainty. The just-in-time manufacturing model was suddenly at risk. The tariffs, meant to protect American jobs, ended up threatening the very industries they aimed to help. Canadian leaders realized they could no longer rely solely on the U.S. market. Premier Doug Ford, once eager for closer U.S. ties, was forced to protect Ontario's industries from unpredictable American policy. Diversifying away from the U.S. became an urgent necessity. The battery industry became the ultimate test case. Ontario's heavy investment in EV battery production raised a crucial question: where to sell? The threat of future U.S. tariffs made the American market a risky bet. What if a future administration targeted Canadian-made batteries? This fear, born from the steel and aluminum disputes, pushed Ontario to look to Europe for stability. That decision set the stage for today's dramatic pivot. Premier Doug Ford's pivot to Europe is a calculated gamble. Facing American protectionism, Ontario sought to de-risk its economy by forging new alliances. Months of quiet diplomacy with European officials paid off. Ontario presented itself as a stable, resource-rich partner for Europe's green transition. The strategy: insulate Ontario's battery industry from U.S. unpredictability. Ford is betting Europe offers the stability and growth the U.S. no longer guarantees. This bold move redefines Canada's place in the world, no longer just a junior U.S. partner, but an independent economic actor. Whether this gamble pays off remains to be seen. But it's already reshaped North America's economic landscape. Ontario's decision is sending shockwaves through Main Street in both countries. In the U.S. auto belt, automakers face production delays, higher costs, and a scramble for new suppliers. Job security is gone. Layoffs loom for workers and small businesses tied to the auto industry. In Canada, the mood is mixed. Celebration for the European deal, anxiety over possible U.S. retaliation. Many Canadian businesses still rely on the American market. The fear a broader trade war could threaten agriculture, lumber, and manufacturing. The move creates winners and losers within Canada itself. The U.S. will have to accelerate domestic battery production, but that will take years. In the meantime, it risks losing ground to Europe and Asia. For Canada, this is a chance to diversify and build a more resilient economy. But the once seamless North American economic bloc now faces the prospect of being fractured into competing zones. The long-term shifts could be profound. At the heart of this shift is the Volkswagen battery plant in St. Thomas, Ontario. Once a symbol of North American cooperation, it's now a sign of division. The plant's deal included a crucial clause: if U.S. trade conditions soured, output could be redirected to Europe. With American tariffs looming, Ontario and Volkswagen triggered the clause. Now, $20 billion in batteries annually will head to Europe, not Detroit. For Europe, this is a monumental victory, guaranteed supply for its EV industry and a boost for its Green Deal. The St. Thomas plant is now a European economic outpost on Canadian soil. New infrastructure will move batteries from Ontario to Atlantic ports. Ontario is no longer just a US supplier, it's a key industrial partner for the EU. This deal reroutes economic value from North America to Europe. The consequences for trade, jobs, and influence will be felt for years. The plant's transformation is a complete reimagining of Ontario's global role. The flow of goods, capital, and power is shifting across the Atlantic. Ontario's pivot goes beyond Volkswagen. It's a full-scale reorientation toward Europe. The province is fast-tracking upgrades to St. Lawrence Seaway ports, expanding container capacity, and improving rail links. New customs facilities and trade corridors are being built for European markets. Ontario is shifting from a north-south to an east-west trade axis. New trade offices in Berlin, Brussels, and Paris are opening doors for Ontario businesses. The goal: make Ontario less dependent on the US and more integrated with the EU. Educational exchanges, research partnerships, and tourism initiatives are strengthening social and cultural ties. This is a long-term play for a resilient, globally connected economy. Ontario is building new bridges to the east, while old ones to the south face neglect. It's a historic turning point. Ontario is looking across the ocean for its future. The Volkswagen deal has sparked an economic boom in St. Thomas, creating thousands of jobs and revitalizing the region. Local businesses are thriving, but the plant's energy demands are shifting Ontario's priorities. More hydroelectric power will stay in province, potentially raising energy prices in US border states. The energy grid, like trade, is being redrawn. The move also strains North American defense and security cooperation. Economic rivalry could erode trust in NORAD and NATO partnerships. Less cooperation on intelligence and defense is a real risk. Shared resources like the Great Lakes require collaboration, now threatened by economic conflict. The breakdown in trade relations could poison the well of goodwill needed for cross-border challenges. The continent faces a period of uncertainty, where old certainties of partnership can no longer be taken for granted. As the dust settles, North America stands at a crossroads. Is this division temporary, or has a fundamental break occurred? Can US-Canada relations be repaired, or are they on divergent paths? The future of a unified North American economy is in question. Will other regions follow Ontario's lead, fracturing the continent's economic bloc? For citizens, the impact is real: higher prices, job uncertainty, and strained border communities. North America must now redefine its place in a world of shifting alliances. The era of unquestioned partnership is over, replaced by a new, uncertain age of competition.